Last week's CPI report solidified already existing fears, with investors worried before the current Russia-Ukraine conflict, now dealing with the ramifications of skyrocketing oil prices and the Fed expected to increase interest rates up to 6 times this year. Inflation is sure to be on everyone's vocabulary for the foreseeable future. Are there moves to be made in the midst of these inflationary trends? Let's start the countdown and find out. Welcome back to the Investor Place Launchpad, where we take a look at trending investment ideas and try to rocket them to the moon. I'm Head of Mission Control Aaron Davis, and with the release of February's Consumer Price Index, it seems that the continuing effect of inflation is searing its way into everyday costs across the U.S. As tensions continue in Eastern Europe, it's likely that these trends will not only continue, but accelerate as well. As always, before we dive in, we'd love to continue to grow our channel here at Investor Place, so feel free to hit that like and subscribe button and smash that notification bell to stay up to date with us here at the Launchpad. With all of that out of the way, let's see what impact inflation has had and if there's still ways to ride out the inflation wave. First, let's take a look at inflation as it exists and affects today's market. For anyone unfamiliar with the term, inflation is when the general price level rises, each unit of currency buys fewer goods and services. Consequently, inflation corresponds to a reduction in the purchasing power of money. Essentially, where we're seeing that most direct impact today is at the gas pump, where the rising cost of oil has created a scenario where the value of a dollar is less than what we're accustomed to in recent memory in regard to the cost of gas. Similar impacts were highlighted in the Consumer Price Index report for February, the report that typically indicates the cost of consumer goods, which has highlighted an array of sectors where price has gone up. In addition to rising gas, food, and energy costs, the All Items Index has increased 7.9% in the past year, the largest increase since that period ending in January of 1982. While gas has been the primary hit consumer wallets have felt, the follow-up jabs in food are likely to continue with the ongoing Russia-Ukraine conflict. As Investor Place senior investment analyst Louis Navalier illustrates, Ukraine is, of course, the breadbasket in Europe. I believe they grow 1/3 of the world's wheat, 20% of the world's corn, and 8% of the world's sunflower oil. Because it's such a fertile country and a great agricultural area, obviously this is going to be disruptive. We're going to have food inflation along with energy inflation. Further analysis from IP contributing editor Jeff Remsburg also indicates a potential risk to the semiconductor supply chain, the materials that are essentially in every electronic device we use on a daily basis. As the Wall Street Journal illustrates, Russia and Ukraine produce 40 to 50% of semiconductor-grade neon. Approximately 37% of the world's palladium production comes from Russian mines. A prolonged war could cause delays in shipping, driving up prices and pushing manufacturers to seek out other sources of supply. Remsburg is quick to suggest that currently this isn't, quote, something to lose sleep over, but underscores the impact this could have in rising prices of electronics if the current conflict drags out. Though these are trying times that impact daily lives, if there's one thing the Launchpad is good at, it's painting the whole picture when it comes to investment trends. As inflation can be extremely ugly, there are strategies that can position a portfolio to help protect against inflationary trends. While not all companies are the same, many will likely face an impact of rising costs, from shrinking margins to declining sales volumes. IP contributor Brian Perazda suggests that investors should buy more stocks of resilient consumer defensive businesses with high pricing power. These can pass on rising costs to customers without losing volumes. Companies offering exposure to inflation-resilient commodities, real estate, and consumer basics can fare better during inflationary periods. Essentially, Perazda proposes that businesses that provide goods and services that are universal and traditionally will continue despite the current Russia-Ukraine conflict are better bets in this inflationary period. Finally, Investor Place contributor Tescan Jil looked at 7 real asset stocks to buy to protect against inflation. Jil describes how real asset stocks characteristically are inflation hedging and are currently gaining traction among investors, as well as describing how the intrinsic value of real assets tends to increase as inflation goes up. For a full breakdown of Jil's picks, you can head on over to investorplace.com, but Jil suggests that the following are real asset stocks that could provide a safe haven against surging inflation: Cheniere Energy, Enbridge, Freeport-McMoRan, Invesco Real Assets ESG ETF, Prologis, SBA Communications, and rounding it out with SPDR, SNP Metals and Mining ETF. While metals and energy are the thematic plays here, Prologis stands as the unique pick in the real estate sphere. Dominating the e-commerce warehouse space, this California-based REIT owns roughly 1 billion square feet of space in industrial and logistics facilities spread out across 20 countries. Its 2021 Q4 results indicate revenue up 15% year over year to $1.28 billion, with net earnings up $1.25 billion during the quarter. Just Yield does highlight Prologis with a few caveats, stating, currently, PLD stock hovers around $143, up roughly 35% over the past 12 months. However, shares do not look cheap at 50 times forward earnings and 20.7 times trailing sales. The 12-month median price forecast for PLD stock is $174. Interested investors may want to wait for a pullback toward $140 or lower. Inflation will continue to impact daily lives throughout 2022. A growing crisis in Eastern Europe, supply chain issues, and coming rate hikes are all factors likely to affect lives and investments over the course of the next year. But what do you think? Is inflation a concern in your portfolio? Are real assets the way to go? And what other areas are hitting wallets as prices rise? We'd love to hear your thoughts in the comments section below. Well, that's all we have from the Launchpad this week. If you'd like more insights like this and Just Jill's full breakdown of real asset picks, head on over to investorplace.com, where we release articles daily. And as always, check back with us here at the Launchpad, where we will continue to look for trends like inflation. And as always, try to shoot for the moon.